What's going on, guys? Huge thing happening in the market right now, and if you guys aren't seeing this, I'm going to tell you what's happening. And if you just look at the chart right now, right, you notice that there's a high here, okay, and this is the high of the entire S&P 500. This is how high we got, right, and this was in 22, so last year, okay. And hopefully, I'm hoping we can reach this by this year. If not, maybe next year. Who knows? Which is in a few weeks. So I want you to realize that even if we go to the 6 months, yeah, we're reaching the high. Like if I just expand it, this is the entire S&P 500. That's the high right here. You know why that's that's huge. That's huge because if we break this, we're making newer highs, and that shows very, very strong bullish momentum and bullish price action with the S&P 500, and that's good for a lot of companies. A lot of companies need that bullish momentum in the market for their stock value to go up. So very good. Now, what does this mean when we're trading on a day-to-day basis? This means that our weekly buys should obviously be bullish. If we're bullish on the month, then we're trying to take those highs, right? So we can mark those highs up here, mark them this, and we can say, let's see, can we have like text up here? Oh, no, I gotta add it to the, whoops. I gotta do this. So we're gonna do, what's the text gonna be? I guess, major high. Major high. Sounds kind of fucked up. Major high. And we are gonna make this a little bigger. Okay. So as you can notice right now, price has on the S&P 500 on SPX has completely violated this fair value gap here, which I will mark orange now because it might be used as a inverse fair value gap for price to bounce back on and to reprice itself. And I also marked out the high of this fair value gap. The high, the candle that fair value gap was created on. Price almost took that out, and it's actually getting so close on the weekly that I'm pretty sure you can see on the daily. Yeah, the daily is also pretty close. So I'm expecting price to at least break through that either tomorrow with news, which it probably will. Yeah, talking about news, I just want to just take a look at what's going on with news. This whole candle was all directed by news, and we're not over. I mean, tomorrow's Friday. Yes, tomorrow we also do have news. Is it the most high impact news of all time? No. What was yesterday in CPI. So Tuesday and Thursday were probably the most impactful. Okay. Other than that, the weekly has just gone through multiple price levels, not only 1, 2, 3, and almost 4 now, and it's heading towards that major swing. The high of the S&P 500. And if you looked at the news recently, especially CNBS what is it called? CNBC, my bad, CNBS. CNBC, they've released a lot of news reportages and a lot of breaking news of saying that the S&P 500 is bullish. You have not seen one weekly bearish candle at all. And if it was bearish for most of the week, it got bought up right away. And that is incredible to see. And the only way to see reversal is either if we see consolidation, right? Or we see like a stop and trend or like a doji like this. That's what I'm expecting, like one big liquidity sweep around here. And that's probably where we're going to stop all this bullish price action, all this bullish buying, right? So for the next, at least, I don't know, month or so, we're going to be bullish for those major highs, right? Until I see something else that tells it otherwise. So Let's jump into what happened today. Let's just jump into the 4 hour. Not much. I'm gonna say that right now. Not much happened. We had, this was from Wednesday, then Thursday happened. Oh wait, no, my bad. FOMC happened. FOMC happened Wednesday, not Thursday. Thursday, not a lot. Thursday we just kind of traded up here. Didn't have any kind of PD raise. I know probably someone else had PD raise and could determine why that traded down. But I didn't have anything. Again, we're on the 4 hour here. That's why it looks like a big time frame. Not a lot really. I mean, it just reversed, traded down into the daily fair value gap, right? Used as inversion. There's also that 4 hour fair value gap. I'm pretty sure you can find a nice little 5-minute fair value gap that will indicate you right here. Other than that, that's all that really happened. I personally didn't take a trade. I know that ICT took a trade on the NASDAQ, if I'm not mistaken. I'm pretty sure he took a trade somewhere around here. This, can't remember who it was, but it's in one of his videos. But my main topic, what I really want to talk about, is market structure shift. Okay, because I didn't get any questions from it yet, but I have made a Discord. Just to let you guys know, this wasn't really planned, but I made a Discord, and in that Discord, I posted a bunch of chart stuff, a bunch of strategy, and in my strategy, right, that I posted publicly, I'm still refining it, so it's not fully built and fully done. But if you are going to use it, I want you to know a few key things, right? When most traders start off, and trust me, I still consider myself a beginner trader. So anything I say here should not be used financially. You should not use my advice financially. You should not use my advice to do anything financially. This is just me speaking publicly, right? I'm not telling you to invest your money in something or somewhere, right? Using my strategy. It's just out there to help you. And so in my strategy, it just says use market structure shift. But for some people, and still for me, what does that mean? Okay. And I'll show you an example. I'll show you bearish and bullish. So I'm going to take my tools here of, let's see where they are. Path. Okay. So let's say we're going to do bullish. So we start off with, really? Why is this not working? Hello? Oh, what the fuck? Oh, gotcha. Okay. Oh, I know what's going on. Yeah. It was anchored. Let's do this, and let's favorite this. All right, word. All right, so if we have a bullish example, a bullish market structure shift would be having a bearish order flow. Okay, so bearish order flow shows something like this, right? So you have a down move here, right? And you're making a lower high, or a lower low, then a lower high, then a lower low, then a lower high, or might some different, something like this. This is very aggressive. Boom. Something like this. Something realistic, doesn't have to be too crazy. Yeah, these candles look whack. But let's say all of a sudden it goes like this. Okay. Yeah, these are wacky as shit, bro. What the fuck? What the fuck am I doing? Guys, I'm not a content creator, so I don't do this on the daily. I'm not gonna lie. All right, so it's a really bad example, but as you can see here, what I want you to highlight, and can I have the text? Okay, what I want you to know is if we're in a bullish market structure shift, what we're looking for is bearish order flow. Okay, so which we do have. And what is bearish order flow? Bearish order flow is you make lower lows and you make lower highs. Does that make sense? And we're going to mark it. Can I do this by any chance? Like if I do this, okay, it doesn't work. Doesn't matter. All right. So what that means is we're currently in a bearish order flow. So what that means is obviously not everyone's going to draw their bearish order flow like this, but I'm going to draw it red just so you understand. Now, lower lows is this. That's a lower low. This up here is a lower high. We'll take this example. Lower low, lower high, then we make another lower low. You know why it's a lower low? Because it's lower than this low. Does that make sense? Let me get my circle. This right here, this right here, this right here, this right here. Don't know why they're different sizes, I'm sorry. And this right here. All of those, and I'm going to just do a little. All of those are lower lows, okay? And lower highs, who are up here, okay? Those are described as lower highs because they're still considered highs in the market as swing highs, but they're not, and they're lower than this previous high. This high isn't above this one. That would be a market structure shift because this high, this lower high, isn't actually lower than the previous high, right? If that makes sense. And I'm going to mark this here too. All right, cool. So now you know. Okay. Now, how do we get a market structure shift? That means that a bullish market structure shifts, which means that the bearish order flow, the bearish trend is broken to now be bullish. So we're looking for a market structure shift or a change in direction to be bullish. So what that means is that we have a high that is broken through, and broken through, I mean that price is closing above. Usually you want to see this in one candle or maybe two, maybe one that wicks into it and the second one that is completely broken above. And that's how you want to see it. So in this example, we'll start it here. We have a lower high, or a lower low, lower high. Then that lower high creates a lower low, and that lower low creates a lower high. That lower high then creates a lower low, lower high. And this is where it's important. This lower low creates a lower high. Then this lower high creates a lower low. And what you're expecting? A lower high. But what do we get? We get something different here. We get a higher high. Uh-oh. That's important. This high is higher than this lower high. So there's something happening here. There's a break in something. That's a market structure shift. Even though it seems tiny, it's still true. This lower low created a higher high. Notice that that's not part of the bearish order flow. A lower low should create lower highs. Lower low, lower high. But why is this lower low creating higher highs? Because it's a change in direction. Usually, this is because this lower low is met with a PD array, fair value gap. I'm going to draw it super nicely for you guys, just like this. It's met with some kind of PD array. It's met with some kind of fair value gap, order block, liquidity. Usually, liquidity is a huge one. And if you combine all of them, liquidity, fair value gap, order block, breaker block, all the things you learned from ICT, market structure shift is also a ICT concept. That's how you apply it, right? Because if there's no liquidity anywhere and nothing should be impacting market, then this lower low should not just completely create a new higher high out of nowhere. That it doesn't work like that. There needs to be some kind of reaction off some kind of price action. There needs to be some kind of reaction off somewhere. Okay. Usually another good way to tell if this is going to happen is when it hits this, it's either a huge outburst or it's consolidating and then there's an outburst, right? Consolidation usually means that we can now we're now debating on where price should go, right? Because is there consolidation during this whole trend? No, it knows where it wants to go. It knows how it needs to get there. And it's great. It's going to create those lower highs. It's going to create those lower lows with no questions asked. Questions asked, right? But the moment it starts consolidating or it just spurts out a high, that's when you know something is changing, okay? So that's the market structure on a bullish market structure shift, right? But now if you take this on the opposite side and you do a bearish MSS, you're looking for what? Bullish order flow. Okay. And what does that mean? That means that it's higher highs and higher lows. That makes sense? So let me draw it out for you. We want a bullish. So we're going to go like this. Right around here. Yeah, perfect. We're going to do bullish here. Boom. Don't want to be too weird. Boom. Boom. Something like that. Boom. Boom. Let's do one more. Boom. Okay. Again, this is kind of messed up. I'm sorry. Not very good at this. But this should be clear now. This should make a little more sense. Because what are we doing here? We have higher highs that are created over here. I like to call these swing highs. You know, all the times these higher highs are swing highs. Okay? All these are swing highs. And then you have the higher lows. Now, you can see here that these lows are higher than the previous lows that are being created. Right? Notice that this low is lower than this one because this one is higher than this low, but it's still considered a low. It's still considered a swing low. Now, this looks like it's a trend in like the 1 minute, but you can see this in any time frame, even the daily. And sometimes some prices are through the roof and they just have one big weekly candle. That's still part of the trend. It's not breaking out of everything. It's still part of the trend of being bullish or bearish. Okay. Let me note this. Higher highs are yellow. All right. And higher lows are black. All right, cool. So now that we know that, what is considered a bearish market structure shift? That means what I want to see is a lower low being created. That's what I want to see. I want to see some kind of lower low be created in here. Now, pay attention. Swing low creates a swing high. That swing high is above this high, so it's a higher high. That higher high creates a higher low above this low. But then this higher low creates a swing high. It hits some kind of liquidity pool, fair value gap, you name it, order block, sweeps it, reacts off of it. And it creates a very strong down move that breaks and it closes. This is a closed candle, fully closed under this higher low. That is considered a bearish market structure shift. Because now you can expect price to target liquidity down here and to have a bearish order flow. Right? Now, you know what you could do, and this works, you could just do this. It's going to look kind of fucked up. Boom. Whoops. That's not it. Look at that. Does that work? Does that work? Yeah, it does. Why? Because we're in this huge uptrend. Huge uptrend that happened. Don't worry about this. Huge. We get to this. Boom, 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 boom. Market structure shift off this, daily fair value gap, whatever. Boom, we break down. Now, this is a bearish order flow, right? So we're trading down. But so at what point can there be a market structure shift? Down here, right? Now this looks like a 5 minute, maybe 15 minute, maybe 5 minute, because 5 minutes usually creates those higher highs. On higher time frames, like the 4 hour, you might see these higher highs, but there might be 3 in this downtrend. And in my strategy, I prefer a trend that isn't lasting for too long, because that creates more liquidity. Okay, if there's a trend like this where it's only 3 highs, that means that, or not more liquidity, there's more potential take profits. And for this is a bit more risky, because this might be a market structure shift. It might be valid and all. There might be even if we do like standard deviation, if we really want to do it, right? Standard deviation crosses all above those highs. But the only worry I'd have is if this standard deviation was like down here, for example, very small, just take for example, then what I'm worrying is that these liquidity points are actually going to reverse price again. So I'm making sure that, when I take my trade, the standard deviation is above all those highs, right? So this -4 is above this last, this lower high, right? I'm making sure that that happens. And this is just me drawing it, but this is what happened. I'm gonna learn more, because I'm not I'm confident in this, but live trading in it, you gotta understand market structure shifts happen on any time frame every single day, right? Because for price to go down, to go up, whatever, there needs to be some kind of change. You can't base everything off the 1 minute, the 5 minute, the 15 minute. You got to go higher. You have to go higher. For me right now, what I'm trying to do is I'm trying to base my structure shifts off either the 4 hour or the 1 hour. If something happens on the 4 hour, it's going to be a bigger move. And I'm probably anticipating that if there's a market structure shift that happens on the 4 hour, where the body closes above that high or low, I will actually take the trade in the next day, because that's not going to happen same day. That's we would need, it happened in 2 days, and I'm willing to wait because it's going to give me a good trade. If it happens on the 1 hour, it might be a little different. That might happen where, I did that once where I did a market structure shift on the 1 hour. It did work out, but I got in and it was like 3:30, so it's literally like, it might be a very late a day. So I don't maybe want to do that, which is understandable. If it happens on the 5 minute, it happens on the 5 minute, right? But then you got to realize on the 5 minute, there's a lot more liquidity. There's a lot more of swing highs and fair value gaps that are being created every single tiny minute. So there's more PD arrays to pay attention to. So if your profit targets are realistic to the standard deviation that is being shown, then that's fine. Then I would take the trade. But be aware, the lower the time frame, the more things come into play, because sometimes you might not realize, but you might be in the 1 minute and you might take a trade and you're actually inside a 4 hour bearish order block or 4 hour bearish fair value gap that you have just swept, and you're going bullish, even though that the whole 4 hour wants to go bearish, and then you get fucked, right? So you got to look at the big picture before you look at the smaller picture. All right. I'll leave you guys with this, and I hope you guys have a good day. I did not trade today. Didn't do any trades. Probably won't do anything tomorrow. Yeah, I'll see you guys later. Peace.